Finance and Revenue meeting is called to order at 6:20 on the 12th of May. Bernie Flynn Chair, Mr. William Scott, and Mr. Nick Allen, and Barbara Leonti, Finance Director. Number 3, comments, suggestions, petitions by residents and attendants regarding items not on the agenda. Do we have anyone that wants to share some wisdom?
Bernie?
Yes.
Hi, thanks. The only thing I didn't.
Good evening, Mr. Mayor.
Good evening, Mr. Chairman. The only thing I didn't see on the Finance Committee that would be good to get started is the monies. I guess they've already been put aside, except for there was an additional ask for it was $4,000 or $5,000 for the economic impact study, where the county gave us is in the process of giving us $11,000 for their kind of matching side of it. And the borough previously allocated, I believe it was $10,000, but there was for the economic impact study for the restoration of rail service. But there was another piece that was proposed, which is an equity analysis as part of the economic impact study. And I think that the equity analysis is important component of that. So I believe the total cost is $26,000, Mr. Prone, if I'm right there.
Barbara would be able to tell us because she has the files right in front of her.
I think what Jordan might be referring to was last month. I think Joanne Kelton or the mayor sent an email, and it really didn't get any traction. Then
no.
Pardon me?
What? No, go ahead. Finish your thought. I'm sorry.
I don't think it got any traction, and it was not. It was brought up, but there was no decisions or made on to increase the borough's contribution at this point.
Oh, I think we had that discussion.
Well, I think it got tied up with a lot of the other stuff on the railroad, and as happens every now and then, you know things get going off in different directions, and that's what happened. It's my recollection.
Going down different tracks, huh? Okay, there you go.
Something like that. Yeah.
Yeah. Well, Barbara, what can you shed some light on? What monies that we have set aside, but we do have anticipated monies coming from the commissioners.
So right now in the budget, we have $9,000 set aside in boards and commissions for the Railroad Commission.
Thank you very much.
So it was that, and then there was the additional ask for the equity component of it.
Yeah, there was an email that went around asking for an additional $3,000 or $4,000. Correct?
It sounds like it's more than that, because if there's only 9 from the borough and 11 from the county, I believe, then I think it would be 6,000. I think the cost of just the economic impact study was 21.
Well, why don't we flush that out and get back to you next Wednesday or tomorrow if Barbara's able to flush it out quicker.
Okay, we can talk about it at on the council session, and just want to make an agenda item for next week. That works too.
We'll do. Okay.
Okay, sounds good. Thank you.
Thanks, Mr. Mayor.
Pleasure.
All right. Anyone else? I know Bikram is drinking plenty of water. You ready? Number 4, PFM's Pension Management 2021 first quarter review. Only good news, Bikram. You're up. Something's wrong with your computer. We have you unmuted, but you're muted on your computer.
Yep, I was double muted there. Sorry about that. But yeah, good to see everyone. Thanks, Bernie, for the time here. So what we have are the results for the pension funds as of the first quarter. So we'll spend some time going through the executive summary. I just want to touch on the markets. talk a little bit about what we're seeing from an economic perspective. We had some data come out, this morning that impacted markets today. But as the committee knows, we certainly look to the long term. But I also want to just talk through some of the changes we've made to the portfolios to help protect capital as we navigate the recovery and some of the continued uncertainty and choppiness that's expected. So when we take a look at index performance, really broadly speaking on the domestic side, we were up about 6% as of the end of the first quarter. Looking as of yesterday, up about 12%, 11.5% really for the Russell 3000 index. The markets were down about 2% today, so a bit of a hit there. But overall, good start to the year when we think about equity markets. When we look at capitalizations, we've seen smaller companies outperforming larger companies year to date. We've seen some of that momentum slow in the recent past couple of weeks, but overall, small caps are outperforming large caps. But really where we've seen, a shift is growth versus value. So I know that the committee is aware that really since the global financial crisis, the recovery we experienced over the last 10 years or so, growth really prevailed through that time. But as we are coming out of the recession from last year, as we are recovering, we are seeing value, we are seeing cyclical companies and sectors perform well, be it financials, materials, et cetera. We remain diversified across both growth and value, so we are participating in that recovery. But I think that that's just something notable to make mention of. With regard to international markets, we're seeing strong results there as well, up about 8.5% year to date as of yesterday. When we look at international versus domestic, no question that domestic markets have been performing better than international markets, really since the markets bottomed out in March. And, when we take a look at what's going on overseas and where they are as it relates to their recovery and the pandemic, there's no question that we are further ahead along that curve. Not only was the Eurozone and other areas of the global economy in weaker positioning going into the pandemic, but when we think about, where countries are with regard to vaccinations and their ability to reopen their economies, they are certainly behind us. And so while we expect from a valuation perspective and also just from a positioning standpoint, international equities to perform well over the longer term, right now we do expect them to lag domestic markets, at least for the short term. Public real estate, we've seen a strong recovery out of public real estate markets, and I just make mention of that because we did add to that allocation. And then if we just go back to the prior page, perfect, thanks. Fixed income, we've seen struggle a bit, down about 3.38% as of the end of the first quarter. Rates have come down, and so we have seen fixed income come up since then. It's down about 2.5% year to date, but certainly a drastic difference as compared to last year's return of 7.5%. So, what's driving the markets? What's driving fixed income returns? First and foremost, as we've talked about, vaccinations continue to ramp up, continue to make an impact as far as individuals being fully vaccinated here domestically, and we're slowly starting to see additional age groups. Pfizer recently approved for the 12 to 8 to 15 age group to be able to get vaccinated. So we're slowly making progress along that front. We're seeing improving economic data, consumer confidence, manufacturing data that's been positive and coming up. That is part of one of the reasons why we saw strong inflation numbers today. That coupled with the fact that this time last year inflation was essentially at zero. So when you come off a very low base, 4.2% seems like a drastic rise. We have increasing inflation expectations, which have driven some of our portfolio decisions that I'll hit on. The Federal Reserve, as well as fiscal policy, continues to remain accommodative, which is something that we see as buoying the markets at this point, and something that we view as constructive when it comes to equity returns moving forward. That's kind of the broad market snapshot. And on the next page, we get into the portfolios. So if we take a look at the police pension fund, market value is $43.585 million. That is as of the end of March. When we take a look at the non-uniform plan, about $23 million as of the end of March. I have some updated values here. So the police pension fund is up $44.821 million, so up about $1.3 million since the end of the first quarter. That's about 2.8%. And when we take a look at the non-uniform plan, it's up to $23.691 million, so about $700,000, reflecting a similar about 2.8% return so far into the second quarter. So overall, when we look at the quarterly return, about 2.28% ahead of the benchmark for both funds. And looking at the year-to-date number, obviously the same. And that one-year number is really reflective of the recovery, starting from April 1st of last year through March 31st. And you can see strong absolute returns at about 35, 36% or so if you're rounding up. Strong absolute and strong relative against the benchmark of 31%. Okay. When we take a look at the portfolio, so this is, if we take a look at the left side, our investment committee, if we just go up to, yep, perfect, thank you. So our investment committee has, continued to meet regularly through the recovery, and we have made some specific decisions to the portfolio. So the first, we have added a 4% allocation to public real estate. That public real estate allocation is funded through Cohen & Steers and Principal. When we think about the low interest rate environment, public real estate deploying additional income, 90% of their operating income has to be deployed as dividends to investors. We see public real estate as a good income proxy, income substitute to fixed income. So given the low interest rate environment, we see that allocation is constructive. Additionally, it does add diversification to the portfolio since it is imperfectly correlated to the equity markets. And then third, when we look at valuations in certain areas of the real estate markets are depressed following last year. Think about office space, you think about retail. As we come through the recovery, we expect to see a recovery in certain areas of the real estate market. Couple that with the fact that areas like data centers and warehouses are poised to continue to do well as we, continue with WebEx calls and shop on Amazon. So, those areas of real estate we see as poised to perform well in over the coming months. And so we felt that for those reasons, it made sense to add that allocation. And so those were added in March of this year at a 4% weight. Okay. In addition to that, to hedge inflation and also in light of, once again, anemic fixed income returns that are expected, we did add recently, as of last week, 2 dedicated commodities funds into the portfolio. So the commodity strategies provide exposure to areas like energy, precious metals, to hedge against rising inflation. And so those 2 strategies are recent additions. We sent out a portfolio update to Mike and Barbara, informing them of the change, and those were implemented last week. And lastly, with regard to fixed income, we did have an allocation to high yield. That was by way of a passive strategy. Given that high yield spreads have come in and the opportunity within high yield has come down, we've chosen to replace the passive strategy with an active manager to provide for additional upside opportunity moving forward. So that is a third change that we made to the portfolio since I last met with the committee. And so I just wanted to make sure that we covered those changes to its fullest and see if there are any questions with regard to that.
All right, I have a few questions, Bikram, as you went through it. The supply chain, the 4.2% of inflation is the supply chain causing that problem?
Yes, Bernie. So, to that end, when we look at that 4.2% number, there's no question that supply. I have a tongue twister like you. The supply chain constraints are absolutely a factor of that. And so that is one of the drivers of what we're seeing in that number.
And also, I'm a little hesitant about commercial real estate, even though I have PIMCO in my own personal stuff too. But the REITs, the corporations aren't bringing people back very quickly. I mean, I was told that one of the largest security firms in Chester County, I don't want to mention their name because I don't have any stock there or any position there, they're not planning going back to 2022. So the big buildings that are empty right now, do you think that's still a wise choice at 4.2% of our portfolio to be in
Yeah.
office buildings?
That's a great question, Bernie. So a couple comments to that. First, when we take a look at these two strategies, I think it's important to make the distinction that Cohen and Steers in principle are actively managed strategies. They're not indexed. So when you invest in an index, you're buying everything in the index, whether it's good, whether it's bad, and you're going to ride that roller coaster. With these active managers, they are making the call on whether a particular investment is a good investment or a bad investment. The reason that we have decided to go active for this allocation, unlike years prior where we used to be or were typically passive, is for that exact reason, Bernie, which is that the markets, while they are presenting opportunity, are very fragmented right now. And, you know, to give you an example, when you look at office space and when you look at rent collection is still high. It's still in the mid 90% range. The issue is going to come with lease renegotiations. When leases come up and companies are realizing, hey, we're not using this space like we once used to. We're either going to downsize or renegotiate. That's where we see the potential hit, but that's not necessarily coming tomorrow. And if we actually go to page 5.15 of the material, which I know is toward the back, but you'll see that these two strategies are not focused on a particular sector within real estate, 5.15. But they're well diversified down.
Oh, there's that name I didn't want to say at the very top.
So if we go down to page, I'll tell you, it's page 50 of 67. That might be easier. The PDF. So page 50 of 67.
Oh, page 50, I got you. Hold on.
Yep.
My apologies.
Perfect. Thank you. No worries. So if you look at Cohen and Steers, for example, Bernie, you can see that it is diversified across apartments, self-storage, data centers, and office space is only 1.4% of the portfolio. So it's 1.4% of 4%, right? So, and if you go to the next slide on page 51, you'll see that office is a bit higher at 10%, but in aggregate, once again, 10% of 4%. And it's actually split 2% for each fund, so it's 10% of 2%. It ends up being a negligible number.
Okay, I can see the other thing when you said you bought the whole portfolio, all the things that are sitting in there as well. I did like the casino funds. That was pretty good. So, Mr. Scott, do you have any questions for Bikram? You're muted. Still muted. Mr. Allen, till Bill figures it out. Mr. Allen, you have anything?
No, I don't have any questions today.
Okay, thank you. Mr. Scott, you're unmuted now. Go ahead.
I don't have any questions.
Oh, very good. Thank you very much. Bikram, thank you. The expected choppy of the market, when should we see that?
Mm-hmm. We're seeing that right now, Bernie. If you take a look at markets last week, markets actually were reaching record highs almost every single day of last week.
Right.
Since Monday, markets are down 4% simply because of the news that came out today. So we anticipate the choppiness, and it's these decisions that we're making tactically and actively to try to manage risk in the portfolio, and hopefully, you know, as we're making these decisions, we're able to protect capital, you know, on the downside and also add value on the upside, as is, you know, our investment philosophy and what we've been trying to do on behalf of the borough for, you know, since our partnership. So.
Thank you very much. Yeah, I've noticed we've gone from 34,000. Now we're in the mid 33,000. So it's hopefully it'll bounce right back. But thank you very much.
Yep. Absolutely.
See you in the Q2. Thank you. And hope the baby's doing well.
Thank you. Take care, everyone.
All right. Moving on to number 5, discuss the process of a timeline for preparing the 2022 budget. Mr. Scott and I had a conversation with Mr. Perrone about allowing each committee to interview their respective departments and then report everything back to the finance committee. Is that still the plan you'd like to follow, Mr. Scott?
Actually, it never was. If I could set it up in a certain way, for years, we did it just the way you said. It was all split up between committees before it got to the finance committee. And then in the last couple of years, and Mike Perone put it on where there was an array of department heads come before the finance committee for openers, and we have a very dedicated meeting to that. I raised the issue because I thought what Mike is suggesting again for this year is not a good way to do it. It was just too much. It was too much information, as they say. And the opposite of doing what Mike suggested is to go back to the old way, which is what you have suggested. My thought is that, and I'm looking at a list here that I've drawn up of just what I remember to be all the committees that have to do the lifting, or all the departments. I believe that in the first instance, we should not go over the police budget. In the first instance, we should not go over the public works budget. Likewise for recreation. And because, well, public works and recreation, projects and big things come up, and the dedicated committees are better for that. Now, admin comes to finance anyway. Is that not right?
That's correct, yes.
Admin comes to finance, and finance is in admin. Barbara Leonte is in admin, or is that a separate?
Yes, finance would be within admin.
Okay, so that comes to us anyway. And parking has a dedicated committee, but in terms of the finances of running that department, I think we could vet that in the first instance because, you know, they're not building new parking garages or anything like that I know of. Ms. Sprung can add to this. And
the parking department and parking committee, they have a capital budget. So if you want to go on with your plan, I think the parking committee should look at the parking department's budget.
well,
So,
okay.
so Mr. Scott, what are you proposing that we do? What would you like to do?
I'd like the police go to the public safety. I'd like public works to go to the public works committee. I'd like recreation budget to go to the recreation committee. And now Mike says parking should go to the parking committee. I mean, I wouldn't argue with that, but we have admin and sustainability. We can look over that. That there's no sustainability committee necessarily anyway. What am I missing? Sewer. Unless there's some cost for
Sewer usually goes under public works department committee reviews.
yeah, I'm not talking about that. I'm talking about the ability to make decisions about the budget request from the sewer department by the finance committee. It seems to me that there's not a lot of heavy lifting there. You know, unless they're building a new sewer plant, then because we do it a little bit backwards.
Okay, so the administration has no problem with your proposal, Bill.
What you get what I'm saying, and you think that's okay?
We have no problem with that.
I think it's a good idea.
For the record, I'm cool with it. So we
I
got
was gonna say,
three of
Mr.
us on
Allen.
the committee that are cool with it. So
Yeah.
Well,
Yeah.
so, excuse me, Bernie, but Mr. Perone, I just scratched out the different not committees, but the different departments. Have I missed any?
The only other one would be housing.
building and housing, now we go to smart growth.
I think we can review building and housing too in finance.
Okay.
Uh,
Well, send me your scratch notes and we'll implement them, okay?
Is that okay with everybody?
It's okay with me.
Yeah. I would like to make the observation that in a way we do things backwards. We figure out how much is in the budget and then in another sitting, we figure out what the different departments should be doing next year. So I will scratch that out and I will send it to Mr. Perone. And if either of you guys want to sharpshoot it, fine. But I think this solves the problem that I have, that you have, Bernie, about heavy lifting, and it also solves a problem that I have
Okay.
about not, frankly. Well, anyway, let me not say that. Okay, I'll do that. If we're all in agreement. Thank you.
Thanks, Mr. Scott. All right, anybody else have any, the most important committee we have is IT with Bill Mann. And I don't ever want anybody to think not, because he keeps this borough safe with all his fishes.
Thank you, Bernie. I was just thinking about that when you were talking about budgets.
Come on.
You gotta keep the fish fed. Thank you. Anyone else have any comments on how we should do things? Any
Bernie?
department listening? Yes, who's speaking?
It's me, Bill Scott.
Hi, Bill. Yes.
So as you noted, I forgot about Bill Mann. Impossible to do, but I did it. Are there any other budgets that you can think of?
No, that's it. That's it. Just the
Yeah.
IT.
Barbara?
No, that's it. We unfortunately forgot Mr. Mann. My apologies.
Okay. That was
Thank
a
you.
terrible mistake.
Barbara
All right.
shows me a buck.
Let's move on to number 7, approve, number 6, April's 2021 financials.
If we could start with page 1, please, Bill. Looking at the Treasury report for the month of April, we started the month with $13,887,556 in cash. We had receipts of.
Hang on, Barb. Bill, nobody can see the screen. Thank
And
you.
I'm simply going at the bottom of the page, so if you could scroll down, please. Yeah,
There you go.
that total. We had receipts of $7,996,658. We spent or transferred out $5,265,397, and we ended the month of April with a cash balance of $16,618,816. If we could go over to page 3, please. Looking at the budget to actual summary department for the year ended April 30th, 2021. Looking at the column for actual revenues, our actual revenues booked were $12,076,124. This was offset by actual expenses of $8,263,461. So this left us with a net income for the month, or for the year ended of $3,812,663. Looking at this report here, some of the positives for the year ended April 30th, 2021. We did receive our first big remittance in real estate taxes. We received about $3.4 million. Of this amount, we were able to meet our goal of paying down the MMO quarterly. I think that's an important step to take. It helps with cash flow as well as allowing the pension funds to make money early versus at year end. We did transfer $500,000 into both plans. We also transferred $1.3 million into the Santander cash account where we have the short-term loan proceeds. If you
Are we still
recall,
are we still on the same page here?
yeah, these are just my notes that I have. I don't have these written out because I was just going over some of the outlooks for the year ended April 30th. Again, going back to the transfer, we did transfer $1.3 million into the cash account that houses the Santander short-term loan. If you recall, This loan is due and payable in early December. The amount that we owe at this time is $2,550,000. Looking at stream protection revenues, these are coming in very strong. We are at $783,45 versus about $472,000 at this time last year. This is great efforts by Will Williams and his collections on stream protection. Looking at parking had a very good month in April. Revenues were over budget by $22,000. Looking at year to date for parking, the revenues were over budget by $100,000. However, meters and garages are trailing behind budget. Meters are trailing behind budget by about $130,000, and garages are trailing behind budget by about $84,000. Looking at the expense side for the year ended April 30th, we are seeing some negative trends in overtime. We're seeing this especially in the police department and the wastewater department. Currently, year ended April 30th, the police department is overspent in their line item for overtime by $13,150. If we were to project this overtime spending out through the end of the year, we project this line item to be overspent by $35,000. Looking at wastewater, they're nearing their annual budget for overtime. Their budget for 2021 was $15,000. We've paid out $11,000 in overtime, so they only have about $3,500 in overtime. And again, if this trend were to continue, we would project this line item to be overspent by about $15,000 by year end. I know for wastewater, they are having some staffing problems that they're working through to resolve, so that should help with this line item. And then my final negative outlook is, again, what I have said for the past 3 months, that our sewer rentals are still trailing behind budget. At this time, they're trailing behind budget by almost $393,000. Does anyone have any questions?
Mr. Scott,
I do not.
Mr. Allen.
Not this time, no.
Okay, thank you, Barb.
Thank you.
The two overtimes, you know, I mean, I understand the situation down at wastewater treatment plant. The overtime for the police department, I'll talk to you offline about that, because I thought we were very close to one more hire, and we should be close to full complement, I think, of patrol people. I think I'm not too sure. So, and then it's going to go to council to hire part-time dispatchers to settle out some of the overtime for the dispatchers, I believe. Is that correct?
Yes.
Okay, and that should cut down some of that overtime, or is the overtime mainly for the dispatchers, or the main?
It's a combination of both police and dispatch. And again, this is just looking at what we have paid out for the first 9 payrolls in 2021. And if this trend were to continue, then we would project that the line item would be overspent. But
okay,
looks there's going to be changes made, so that may not be the projection, but that's just based on the information on hand at this point in time.
Thank you so much. Anyone else have any questions or any comments? All right, hearing none, move on to number 7, approve April 2021 minutes. Mr. Scott, Mr. Allen.
Okay.
Yeah, no problems.
Okay, any other business that anyone wants to talk about finance? All right, so hearing none, seeing none, the Finance Committee meeting is adjourned at 6:54 p.m. Thank you. Thanks, Barb. Thanks, Jerome. Thanks,
Thanks.
Mr. Scott.